Hi, my name is Tom Blake. I'm a certified residential specialist with RE/MAX Liberty, and I'm here with...
I'm Brieanna Kelley. I am the branch manager of Annie Mac Mortgage in Leominster, Massachusetts.
And we are coming to you live, well, not really live, actually. It's
Recorded.
We're recording live from her brand new office here in downtown Leominster. What's the address?
28 Central Street.
Okay, great. So if you want to come visit Brie in person, talk to her about anything and everything loans, 28 Central Street in Leominster.
Absolutely.
So we are doing the second part of our video so we were talking about getting pre-approved and what it looks like to get ready to buy a home. And we thought it would be good to follow up with a video that took you from the offer process to closing and what that looks like from Brie's standpoint as well. You may notice that my glasses aren't tilted this time, which is good. I've got some new glasses. It was driving me nuts. If you look at the last video, I was like, eh. So I sat on my glasses. Don't sit on your glasses and get on camera. It's silly.
Not the best thing to do.
But I'm looking spiffy today, and we are ready to talk. So, all right. So we talked about getting pre-approved. We talked, and in that pre-approval, there were quite a few things. So we talked about checking your credit score. We talked about ways to improve your credit. We talked about the forms needed for verification. We talked about employment history and how to provide for that. We talked about sources of income, hence your employment, and the different types,
right.
Whether it's 1099 or W-2. Did I say that right? Okay, good.
Sure did.
The assets, property that you may own and how that would contribute, or 401k, reserves that you might have, so extra cash on hand in case something goes wrong. And we even went so far as to start talking about loan level adjustments, which is a nice way of saying points. For Fannie Mae. So, so that would mean that if you went through that whole process, you are now pre-approved. Tell me.
Pre-approved.
Yeah, remind me what the difference between pre-approved and pre-qualified is.
So pre-qualified means you put a bunch of numbers in the system, and you're now going to try to figure out what you can go and shop for, but it's never been verified. So it doesn't hold a lot of weight when you send out pre-qualification to the listing agent on a property. They're going to look at it and go, oh, okay, so you said you made X amount of dollars, but it hasn't been verified by anybody. So pre-approved means you've actually gone through the application process and really have supplied the information, had your credit checked, had your assets checked.
Yeah.
That's a very powerful tool in this market.
It's very, very different. And as a listing agent, one of the things that's going to be very important to me is to vet the pre-approval to make sure that the person who is putting in this offer can actually pay that amount of money. You'd be surprised how many people that can be a challenge, or looks a little fuzzy, quite frankly. So one of the things that you do and your company does, everybody who works for a company, is make sure they reach out to the listing agent.
Yes.
And tell me a little bit about that for a second.
So one of the things that happens now, good listing agents like Tom would actually reach out to the lender to begin with to verify that the information that's been provided is accurate. Now on our end, I actually try to proactively reach out to the listing agent and say, listen, I want to let you know that I verified income, assets, credit. I've looked at everything in this file, and I'm verifying the information that's been given to you. Most of our applications or our pre-approvals, we try to have them what's called a platinum pre-approval, which means it's been already through underwriting, and an underwriter's actually put eyeballs on that file, which is very, very important too.
It is a very different stance. So that means the person, you're just waiting to identify a property, and then you can just sort of plug it in.
Correct.
And get them to closing.
Yes.
So we, in discussing where we were going next with this video, thought it would be useful. So let's pretend you got pre-approved, not pre-qualified.
Yep.
You know that you're one heck of a solid buyer. You know what you can afford. Now you've gone out into the market with somebody like me, and you've looked at, in this market, probably like 20 or 30 houses. You've probably put in a few offers in order to get to that place where you have an accepted offer. So we're at the accepted offer phase, and received my first deposit. We're not quite through P&S yet. We're working on home inspection. So we get through home inspection. we get through P&S, and now I believe you take over at that
Yes.
point, right? So so what happens between when when the offer is accepted
Yes.
for you?
So me personally, I would like for you to make sure that you're reaching out and saying, hey, listen, I have an accepted offer. Our home inspection is scheduled for X date. This way I know what setting expectations look like
Yes.
as far as time frame. I don't want to start processing the application too far and paying for an appraisal until we know that
Yeah.
the home inspection's been gone through and you're comfortable with everything. So the next step would be, in that interim, I'm typically saying, listen, right about now I need an updated pay stub, bank statements, which we try to get updated throughout the process anyways. But if I'm asking for paperwork and during this process, you really, really need to make sure that you're getting that documentation over to us as soon as possible. You don't want to slow the process down. More importantly, you have what's called a commitment date in your purchase and sale, which means this is the date that you're saying that you were approved by, and the money that you gave, your earnest checks, so your purchase and sale check and your offer check, your money could be at risk. And if you are not doing your due diligence on your part to make sure you're getting the paperwork over to the loan officer, that could be on you to lose that money. So it's very important.
So Brie gives you an awful lot of information very quickly, and so I want to. That is a really, really good point. So you're going to put down 2 deposits. You're going to put down so in contracts aren't bound without some sort of consideration. In the old days, that might have been a cow, but in today, it's money.
Yeah.
And so the first deposit is usually anywhere from $1,000 to $5,000. In this region, sometimes it's more, and then it can be anywhere from as little as a few $1,000s to as much as like 5 or 10 or 20% at purchase and sale. So this is the earnest money that you put down to show that you are committed to buying this property. It says to the seller, hey, I really want this property. I'm willing to risk this money to some degree. Now, it's your agent's job to make sure that they protect that money for you. It's also the listing agent's job to make sure they protect their seller.
Right.
And one of the ways that the seller is protected is by a mortgage commitment date. So imagine this. You are a seller. The mortgage commitment date is, a week before closing. You have packed up all your stuff. You have bought another house. You are moving. You've paid $15,000 for a moving van to show up, and poof, the money is not there because they did not get, the clear to close was never happened. The commitment, right? So that would also be devastating for you as a buyer too, because now you've just lost the home that you've worked so hard to get. So I'm kind of going off on a bit of a tangent here.
No, that's pretty accurate though.
But so what she was saying is get that stuff to. So I'm probably gonna edit this part out. So I just kind of lost track of thought. So
get the documents to
get the documents.
Yeah.
Right.
So please don't make me turn into a stalker. I will do that if I need to, because listen, I'm there to protect you. I'm there to protect the transaction. We want to make sure that everything's moving forward smoothly. So typically what we end up doing, beginning part of that transaction, is a lot of the times what we do is I send an introductory email. I'm like, congratulations, you have a property under agreement.
Go back to that. Yeah, let's do that.
Let's talk about what to expect next. Please gather all our documentation that's been requested. Please be on the lookout for an email for tax transcripts, which a lot of programs require you to obtain from the IRS. Please be on the lookout for actually give us the information of who you're thinking you're using for homeowners insurance.
Homeowners insurance,
Also, here's, please also send us any what's called a supplement. You might get a phone call from the credit company to verify anything that's been paid off on your credit or updated on your credit or items like that.
Sorry, explain a supplement to me. I don't think I've ever heard that word before.
So what a supplement is on your credit. Say that you pay down a debt and we need to verify that. We have to do it through a third party. So much of our job is verification.
Okay. Sure.
Third-party verification, because unfortunately, some of the mortgage crisis back, many years ago, created checks and balances because people were lying, which is unfortunate. But now, you get to pay for the sins of a few, right? So what we have to do is through a third party, and depending who the credit reporting company is, will contact you directly to contact the creditor. So you're doing a 3-way call. So it's So if
No
you have a
kidding.
mortgage, they have to verify that it's not 30 days late. So depending on when credit bureaus update on the credit.
Okay.
I mean, like if you have a mortgage and it's last reported 45 days ago, so we don't know that you paid the previous month. We have to verify that to make sure there's no 30-day late on the mortgage.
That's interesting. Almost like a 6D certificate to some degree, right?
Correct.
Yeah. So
Yeah. So you have that.
Okay.
You also have to get transcripts, which, by the way, my PSA attached to that would be please go online, try to set up your IRS portal if you can. That will save you some time, which is a great tool to have anyways, no matter what. You go to, it's irs.gov/transcripts.
So what's this for? So now,
to verify tax returns, because back to the whole thing about people lying and say that I give you the tax returns that I really didn't file, but then I really filed these tax returns.
Oh, so you're going into underwriting now?
Oh yeah.
Oh, okay, sorry. Okay, so sorry, I should have.
Well, this is actually up front. So some of the programs like Mass Housing requires you to have transcripts in the file. So that's even before we're sending the file to underwriting. We're getting that information up front.
Okay.
Me personally, a lot of times I try to ask for that at pre-approval even. Because I want to verify you filed the tax returns. And this is even if you're not self-employed.
Okay.
And then I'm also going to verify that you paid any tax return, like any amount that was due to the IRS. So those are a couple of things that we're going to look at.
And that's before an accepted offer, or that
I do that at pre-approval.
You do it at pre-approval.
Typically.
Okay. Well, that's interesting. Okay, that's good.
Oh, you never want to get caught with your pants down.
No.
Just saying.
No, for lots and lots of reasons.
Reputation, and that's something that could put your earnest money at risk if you have a lender that is not doing their due diligence. Yeah. It's very, very important.
Yeah, no, you definitely want to know you have. So this is one of the reasons I work with you, right? Because something that's really important is to work with a lender who has a really good reputation, and you're one of these people. And she's not the only person, but somebody who the listing agent looks at the pre-approval and says, I know this person can go to a closing table based on what it's written on, and lenders have a reputation for that, and it's important. It's very important. Okay, so just to go back a little, so we have an accepted offer. You want them to now let them know you have an accepted offer, right? And you want to make sure that we're dusting off the pre-approval, make sure that everything's up to date. We have all the current pay stubs, we have the current W-2s. We want to make sure that you provide them fast so she can do the work, because a lot of times that 30 to 45 days is not that long.
No,
it's surprisingly.
No. It goes quick.
Yeah, and we've got to get an appraisal in there.
There's some holidays in there usually,
Oh, geez, yeah, of course, everybody wants to close on the holiday. Then we go into underwriting, and so tell me a little bit about underwriting, like what happens now that we're through purchase and sale. We can talk about that in another video.
Yep.
So we're through purchase and sale, we're through home inspection, it's all on you. What happens in underwriting?
Okay. So first you get disclosures that you have to sign, go through, read them, understand them, ask the loan officer questions. It is going to have a whole bunch of information that, there's a lot of information that you are who you say you are, you're not going to change anything, you're not going to, please don't buy anything.
Don't buy Harley.
Don't buy anything.
Don't buy Harley. Sorry.
But we're going to verify all the information, so you need to read through that documentation. And more importantly, it's going to have a breakdown of what the closing costs, prepaids, which are like taxes and insurance, and then kind of what the expectation of what your payments are going to be. Now, typically, we've already had that conversation even before you have gone through that, but you want to confirm that the information matches the conversation that has been had, okay? And then that happens, all the disclosures come in. There's a processor that will go through all of the information, verify everything is still there, and prep it and make it nice and pretty and send it to the underwriter. Now, the underwriter, which some people call it the undertaker, but the underwriter, just kidding. Our underwriters are fantastic, and they are the ones that verify all the information to make a credit decision on your file.
Yes.
They feel like you can buy this house, that you can afford this house, that you can be able to make a smart credit decision, okay? So they finish that process, and then they look at the file, and sometimes they might want additional documentation outside of what we've already provided. So if it's something where, say that you gave me a pay stub and all of a sudden your year-to-date income why is it low all of a sudden? Or maybe you took a vacation, or you got a bonus, or something like that. Or listen, hey, here's another thing that's been happening. You have a bank statement, and all of a sudden there's some companies now that are not reporting on the credit bureaus. So they're going through your bank statement. They go, hey, there's a firm account that's not on the credit. What is this for? So this little.
I'm sorry, you lost me.
Okay. So you know what a firm is? They let you make installment payments on things if you make a purchase. So it's like a credit line.
Oh, a firm. Oh, yeah.
But
Okay.
it's not on your credit.
Actually, okay, yep. So if you go buy $600 worth of shoes, and you can pay in 4 easy installments, a firm.
That's the one.
Yeah, that one. Okay, yeah, I got it.
But it doesn't show on your credit report, so it's a big deal.
Okay.
So that's really, really important. So it's like little things that might get caught throughout the process. Now, again, typically if you have an underwritten pre-approval already, a lot of those things have been looked at, so that's important. They're also going to say, hey, listen, I noticed you had some inquiries on your credit report recently. Did you try to purchase something?
Okay.
Please don't apply for new credit. And if you are, you're gonna have a conversation with the loan officer, please. And then the other thing that they look at is the property that you're buying. So now an appraisal has been ordered. Title work has been, or title request has been sent to the attorney's office. So now they're going to look at the collateral. So you as the borrower, typically if we've gone through that whole process, you as the borrower are strong. Now they're going to go, okay, is the house worth the money that you're trying to purchase it for? That's the appraisal.
Yep.
Is it in appropriate condition? Are there any health and safety concerns? So they're going to look at things like, is there a railing where there should be railings? Is there
peeling and chipping paint?
Correct.
There are holes in the wall.
Asbestos.
Rodents.
Yes. Oh yeah, rodents.
Yep.
Termites.
Termites.
Yep. So they're going to look at that, and then they're also going to go to the attorney and say, are there any liens on this property that would cause an issue later on? Because when you take title of that property, when you own it, you want it free and clear. You want to make sure that no one's going to come back and say, actually, I own that property. So
and a lien would be like, there's mechanics liens, there's liens for betterments from the city, there's tax liens. So if unpaid taxes haven't been paid and the city's looking for that.
Health liens.
Mass health liens, somebody got in trouble there could be, maybe there was a sewer improvement, right?
Yep.
You know?
IRS liens.
IRS liens.
Because the seller owed money to the IRS.
Yeah, exactly. So a clear title.
Title.
We're looking for clear title. We're looking and
good appraisal.
Yeah, good appraisal.
Add value.
Yep.
Good condition.
Yep.
And you as a borrower is strong.
Yes, and that's an awful lot of work. We're talking about a whole lot of things that happen between the time that you go from purchase and sale to closing. There's a lot that goes into clear to close, which is why there's such a gap between purchase and sale.
I call it the hurry up and wait stage.
Oh gosh.
Yeah, and it's the most anxious part of the transaction,
really
I think,
is.
for people,
It really
because
is.
one of the things that's happened, if we've done, you and I and borrower and lender have done the right things, we are now waiting on all of the other parties to get their stuff done to make sure that we can get to closing. And that's why we're in the hurry up and wait stage, because we're just waiting on them. We've done what we needed to do. Maybe we had to get an insurance binder. That's usually what I like to say. I'm like, that's what we have left. Something small. But yeah, and then once it comes, then once that comes out of underwriting, if there's any other conditions, we submit the final for what's called a final approval and a clear to close. So the final approval says you've met all of the conditions, and the clear to close goes, you're good to go.
Clear to close means you're funded. The money will be
Well,
there.
it's going to be. But here's the only thing about clear to close is that I have to tell people. Two things you need to make sure that you understand. We will be doing a soft pull on your credit, meaning we're going to check to make sure that you have not opened any other new debt since we pulled your credit. And we verify it. We verify it a couple days before closing. The second thing is we're going to call your employer and make sure that you are still working. Please don't quit your job. Or change jobs. But people think that once you've gone to that point, well, I've got my commitment or my final approval, I'm good. No, you're not. You are not good until that is recorded at the Registry of Deeds.
Yes. So that what she said really bears repeating. You don't buy anything. Please don't buy anything. Nothing. Zero. Nada. Don't buy a guitar. Nothing.
Some
if it's
people,
on
I'm like,
credit.
don't buy a stick of gum, but
and don't change jobs,
Please don't.
But I have seen transactions blow up in the last 2 weeks because people made some choices that they didn't know they thought they had the money. So and in their head, I know I'm going to be able to afford the house, so I'm going to go buy X. Or furniture. You go and you go
furniture,
buy the furniture beforehand.
Oh,
you know?
the last thing to that is to make sure you are paying all of your bills on time still.
Uh-huh.
Because if you're 30 days late on something, same exact thing, you're going to run into an issue.
You would think that would be,
I know.
you know, you would think that would be just understood.
Right.
But
And
it's
sometimes
not
it's an
always
accident.
understood.
And sometimes it's an
Yeah,
accident.
yeah,
but you
sometimes
need
it's
to
an
be
accident. Yeah, that makes
extra
sense.
diligent at
Yeah.
this time. Extra diligent. So,
Yeah, I guess we did have an awful lot to talk
We
about
did.
post purchase and sale.
yeah.
So I would say that was all very, very good and clear and concise advice on, you know, what to do and what not to do.
Absolutely.
And how to manage yourself from I mean, it's not over. It's definitely, that's the one so you said that hurry up and wait thing, right? So it's uncomfortable on
Yes.
both sides of the transaction, let me assure you. So there's a lot going on. There's a lot of faith that goes on the side of the listing agent in
Making sure the stuff's getting done on the other side.
yeah, and hoping that you're going to show up at the closing table, right? I mean, it really can get pretty hairy sometimes. There's multiple negotiations that happen after an offer is accepted. I mean, what happens if there is something wrong with a home inspection? What do you do? What happens if there is something wrong with the appraisal? What do you do? I mean, if you
Or the title, or someone loses
Yeah.
a job, unfortunately, or
Yeah.
there's so many pieces, moving parts in a
There really are.
transaction.
There really are.
And then it's really important that you have people that are attached to the transaction that are going to get you to closing, making sure that they're looking out for all of those things that
Yep.
could happen.
Yep.
And then continue to have things that should happen the way that they're supposed to happen. So that's important.
Yeah. You know, I forget who said this, but you know, the best surprise in real estate is no surprises.
Ugh.
And so,
No surprises.
yeah, I mean, so, and this is where ideally you would have somebody like a you or a me that would be, so make sure you choose your realtor and your loan officer and
Wisely.
company wisely so that they can see the problems coming before they happen. Because
Absolutely.
there's going to be a problem.
Right.
You know, whenever I talk to somebody at the beginning, we don't know what the problem is going to be, but there's going to be a problem. And the idea is, you know, you can see through that problem and manage through that problem and still make it to a closing table for everybody involved.
Absolutely.
You know?
Want to be proactive, not reactive, but sometimes you do
Yep.
have to be reactive, but
Yep.
you need to be appropriately and efficiently, and making sure that they're looking out for your best interest.
Yep.
Yep.
And that's a great place. You want to leave it there? I think that was
Yeah,
a
that's
really
great.
good place to leave it.
Absolutely.
So, go ahead.
Oh.
You first.
Brieanna Kelley with Annie Mac Mortgage. I can be reached at 978-852-6376.
And my name is Tom Blake. I'm a certified residential specialist with RE/MAX Liberty, and I can be reached at 508-951-2803 or tom@homesjustforyou.com, all one word, homesjustforyou.com.
All right.
All right?
Thank you.
Thanks. We'll see you next week. Next month.